What's going on, boys? How you doing, Grivinder? Let's get right into it here. Go over the ES levels. Go over some stuff overall. There's not too many. A lot of charts are broken right now, but we'll go over what we can. ES, I gave you guys these levels this morning. It's just straightforward levels. They're pretty accurate, as you can see. Resistance, it stops. Support, sometimes it bounces a couple times before it takes it out. Resistance again here. Um, Going down, we had this 46.14 level. Once it broke, it could not get back above it. So 46.14 broke, came down, tested the usual put wall. What's up, Andrew? Came down and tested the put wall, came back up, could not get past that 46.14 support. What's up, Ginger? How you doing? And just a clear downtrend now on ES, guys. Just very clear. They put in the highs way back here. January 4th, they put in the highs, and ever since, it's just been downtrend, vicious rallies, downtrend, vicious rally, downtrend again. And just make sure you have these lines drawn out, guys, because these are very important. What's up, Andrew? It tells you a lot of times when to get out of shorts or into calls and vice versa. Just keep these on watch. Right now, we did close below 45.39, which is the put wall, so there should be a lot more volatility this week, especially with OPEX. It's already enough volatility, right? So we're going to SPY here. I don't even have support lines down here yet. I will draw them out tonight. But we had a gap to fill on SPY all the way from December 20th, I believe. September 17th, there was a gap to fill. We filled that yesterday, and that's where we stopped yesterday. So we stopped at the gap fill level and bounced back up. And even at the end of the day, they held it at the end of the day. Today, very clear. They tried it once, they couldn't get through it. And the second time they tried it, it just dumped below it. So this first line is last week's lows. The bottom line is the gap fill. Did them both, and now we're underneath. So SPY overall on a daily chart here, very clear head and shoulders breakdown. I can't really say much. Where should you look for entries? I mean, SPY can go all the way down to the 200 day now, guys. So SPY right now can go all the way to 439. That's the extreme. What's up, Cordell? How you doing? What's up, Vladdy? So SPY, we're under all the supports on the daily. 439 is the weekly, so that's one spot, and then a 50-day on the weekly is also at 431. So there's a lot of downside here, especially closing like we did. I have this channel drawn on SPX that has been there since the COVID crash. The first time we bounced in April after the COVID crash, we've been in this weekly range on SPX. We had this little head and shoulders on the daily form, and we broke down clearly. So we have 2 more days, guys. We have 2 more days, and if SPY does not recover back into this channel, this could be a month, 2-month long consolidation. So overall, if you look at the bigger pictures, obviously this isn't even a dent. So anyone that's DCAing into SPY indexes every month and collecting dividends and collecting whatever, they have felt no pain yet. Everyone else has felt pain. Options traders have definitely felt pain, but people that are just DCAing into their 401ks for the last however many years in SPX have they don't even notice a difference in their accounts right now, right? Because SPY overall monthly, if you started buying the COVID lows, you're up like big here. And we're still monthly. Like if you guys look, we had 2 months of consolidation, September, October, and 20. We only had January was a red month last year. September was a red month. November was a red month, and that's it. So we have 1 red month and then like 6 green months. So everyone in their 401ks, the older guys, the guys that actually matter to Wall Street, they haven't felt any pain yet. What's up, Ricky? So just keep that in mind. I know it looks rough, like everything's going down a lot, but if you look at the overall picture on the indexes, there could be a lot more to go, just index wise, guys. So QQQ we'll go into here. It's obviously been the weakest ever since they announced that they're raising interest rates. QQQ and growth usually get hit the hardest. We had this weekly channel drawn out on QQQ. We closed below it last week, and that's why I took so many shorts into the weekend. Unfortunately, I took a lot of profit, or most of the profit, on Monday morning, or Tuesday morning. If I held them, it would have been up huge, but that's trading, right? Sometimes you get out early, sometimes you get out late. Other than that, I mean, QQQ has been down for 4 weeks in a row now. And we made a move from 404.58 to 366 today. So a big move down on Qs already. Obviously, the 50-day is right below us on the weekly. On the daily, we're right at the 200-day. That's why I'm saying don't buy too many puts in the hole. Be careful. because once we hit this 200, I doubt we slice right through it. It's very unusual if it slices right through the 200 day. You will probably find some support there that takes at least a couple attempts to break. Yeah, I'm gonna go over Apple, Isaac. Um, we have 364.61. So watch this level on QQQ for a little bit of a relief bounce at the very least. You know what I mean? Like, look at every time we go down in a straight line, there's usually a wicked bounce that lasts a day or two at least. So right now we're straight down for 4 days. We got the 200 day, probably touches tomorrow, and let's see where the Qs act off of that. Let's see if we get a bounce, or let's see if we just slice right through. It might base there and break through later. XLF was way too far off. We told you guys this. I went over this plenty of times. Yesterday I told you look for support around the 50-day and around this 39.27, this line that I have drawn here, because it offered resistance before. We went over it, and now will it offer support, or do we go right through it? So XLF, I'm watching this 39.27 level. There's also a 50-day moving average, which is at 39.38. Just above. So let's see if we can reclaim that 50-day tomorrow. If not, we can go and break this support and go down to 38.50 on XLF. IWM is the weakest sector that I see. Obviously small caps, the biggest holding is AMC. That should tell you exactly what you need to know. And right now it's broken all these supports. I don't even have a support. I had a little tiny downtrending support here, I guess. And yesterday we stopped right at it, but obviously today we just bust right through it. And 204.50 we're trading right now. If you zoom out to a bigger picture weekly, it's still range bound. Like it's just starting to break March lows here. So let's see if IWM starts going down. If it wants to go down more, it's under all the moving averages. I mean, a death cross is coming. The 50 days at 220.270 and the 200 days at 227. It's 10 cents away. If the 50-day moves down 10 more cents, the 200-day will be broken, and that's called a death cross on IWM, guys. So I know things look bad, but it can always get worse. Right now, valuations are being compressed, which means they're bringing down stuff that was trading at 30 PE for the future. Forward PE of 30, they're bringing those down to half and less than half right now. So I know you guys love to buy the dip, but just be careful. Wait for the signal. I did take some farther out March Nvidia calls. I think they crush earnings. But other than that, I haven't added to them. I haven't done anything with them. I'm waiting for a little trend change or some kind of signal that something's going to change, as we have more than a month on them. And that's my plan with the Nvidia calls. Other than that, I mean, people in the group are killing puts right now. Obviously, like, it doesn't bother me at all. I have it farther out. Obviously, it's hard to time the bottom, but let's see what happens. SQQ did exactly what we were talking about. Put in a low, put in a higher low right here, put in a high, and now it's forming a higher high. And then when it comes down, probably a lower low. It's changing the trend in the favor of the bulls right now. This is SQQ, which is the opposite of QQQ, inverse ETF, 3X. So it looks like we're still in store for a little more volatility in tech right now. VIX daily looks pretty scary. Like I told you guys, same thing, changing the trend. We put in a low, we put in a higher low, we put in a high, now we're putting in a higher high. Where does it stop? There is a resistance here at 2460-ish, 2460 VIX. And if we get there, we'll most likely pull back and look for a higher low. So VIX is also showing that there's a lot more volatility to come in the indexes. Other than that, NQ we already went over. 10 years, something I told you guys to keep an eye on. It's very, very strong right now. We ran straight up, bull flagged, breakout, and now do we bull flag again? If we bull flag, that can give the market some breathing room. Like some names that are way oversold can bounce a little bit. But other than that, I mean, it's still strong. We have to keep an eye on it. It looks like it's headed for 2 at least. I've seen 2 resistance back here. So this is probably the target on these bond yields here. You have to keep a 1.968. You have to keep an eye on these, especially if you're a tech trader or if you're a growth trader. Just overall for the market, the yields are a huge thing. When they're ripping, usually equities go down. TNX is also holding up well above this resistance. Remember this huge run up I was mentioning? Huge breakout, came back down, retested perfectly, and then popped again. There is a gap to fill on TNX. Let's see if we can get that gap filled. Maybe some breathing room for a relief rally on the indexes. I know everything looks really, really bad right now, but when these rallies happen, they're vicious. Like bear market rallies are vicious, and we are in a bear market. What else was I gonna type in? I was gonna type in. I forget though. All right, let's go into some of the plays from today. Ricky crushed Nvidia puts. Yash was killing stuff left and right. One thing that Turkey brought to my attention at the end of the day here was Apple. So Apple has been in this huge range for a long, long time, guys. And what happened was we broke out of the range. I'm just going to get rid of this right now. It's not that accurate anyways. So we broke out of that range, went to all-time highs, came back down, retested resistance that it broke out from, came back up, double top, came back down, little relief bounce, and now we're breaking down. So Apple is underneath the 50-day. And usually when Apple's under the 50-day, the indexes suffer a lot. So Apple, we closed below the 50-day. We have a beautiful head and shoulders. It looks like it's following through here. There's not real support here until about 160. So Apple has some room to fall. As I said, guys, if you zoom out on these, what these rich billionaire Wall Street type of guys do, they just DCA into these strong stocks like Apple, like the index, SPY index. And they're not feeling pain yet. Their 401ks are fine. Why do I say that? If you guys zoom out to the weekly and monthly charts, like if you bought Apple way back here and you're just DCAing in, like, are you worried right now? No. So there's a lot of downside possible on these names, especially big tech. If they do want to ruin this market, if they want to bring it down for real, the indexes, they're going to have to attack big tech. And big tech is usually the first to bottom. So just pay attention to these big tech names. If Apple, Google, Facebook start to show signs of bottoms, then that's the time to add to farther out calls or other names that you like or equities and stuff. So like I said, Google, Apple, in the daily, it looks ugly. But if you zoom out to the weekly, everything looks perfectly fine. Like it's just bull flag consolidation right here. So we might have to see if a little more pain for the indexes to come down. We might have to feel a little more pain in all of them 401ks, RSPs before something really happens, right? So Google is one of the biggest companies in the world. We're sitting right on top of the 200-day in Google. It's been basing out up here for a long, long time. Hasn't been able to go. Facebook, same thing, I believe. Facebook's kind of beaten down right now. We're actually under the 200-day. So if you're under the 200-day moving average, it's usually considered as a bear market. So Facebook's already in a bear market. Nvidia, I was looking to buy the support on this flag. It's a big play. We have earnings coming up, at least a run up in my opinion. I'm still holding these. I'm going to trade around them. And then when I see an opportunity to add to them and average down, I will. I'm not going to blindly average down on them. We have till March. Nvidia is one of the strongest companies in the world. Other than that, I mean, this one, downside, you can see 240 this week. So keep that in mind. And plus, I took them with profits that I took on Monday from those puts. So Nvidia, I'm just waiting, watching, seeing if there's a reversal. Not too worried about them. Their March calls are down like 30%, and I don't really care. Just a huge bull flag weekly, as you guys see here. Big run, big bull flag. And now we're just waiting for the turnaround. We're waiting for an earnings run up. We're waiting for the market to bounce. If the market bounces, I think Nvidia will be up 10, 15 points easily right away. So let's see what happens with this one. Sava, I'm holding this one. We should get news tonight, I believe. Either tonight or tomorrow on Sava. There's some catalyst coming, and I'm waiting for the results of that. But again, I have equity and I have February calls, so I'm not too worried. There's sitting right at a strong support. It's just going up and down at this support here. Any type of relief in the market, this one should rip. It's been holding this support for a long, long time here. If it breaks down underneath it, that news becomes very important. But as long as it just stays above this support here at $40.92, Sava should be fine. Neo, I joined Yash on his Neo play. One reason was because China got the good news about the rate easing, and another reason was this falling wedge on the weekly. This is one of my favorite patterns, guys, if you guys know. We're just kind of flagging out here right at support. We have to wait 2 more days to see if this one is going to work or not. Why? Because Friday's close is what matters on this weekly chart. We have a huge falling wedge. After the run that Neo made all the way from like $4, so it went from $4 all the way to $67, guys. You have to remember that. $4 to $67 in a year, and now it's just consolidating that move. And weekly, but this is a beautiful falling wedge. It's just kind of holding on to support here. Look what it did last time. It just kind of consolidated on this falling wedge, and then it went on a 5-6 week tear. So that's what we're looking to try to catch on NEO, especially with the rates easing in China. It should be bullish. Let's see what happens on this one. Uber, we nailed the puts. I think they're up 300%. There's not much to talk about. I'm not really rolling them out. It's already beat a lot. I'll look for puts other places. Lucid has lockup expiry tonight at midnight. And I don't know what's wrong with my internet again. But yeah, Lucid has lockup expiry tonight at midnight. Let's see if the Saudis and other big investors selling off their shares. Everyone is thinking this. That's why I got rid of my Lucid puts yesterday. I don't like to be on the same side of the trade as everyone else. But let's see what happens tomorrow. It's definitely possible they flush it all the way to $34, $33.96, $33.76 is my level on here. The recent lows. ATVI, nothing to talk about here. As I told you, after a company gets bought up, it usually just goes sideways. Microsoft, another one of the big tech boys, just bought ATVI yesterday. What is wrong with my internet? Alright, so Microsoft, another one of the big tech boys. We got this little tiny support coming down here, but these candles, inverted hammers, are definitely showing me that it probably breaks support here. Not in any position for this one yet, but if we get down around the 200 day on Microsoft here at 290, 291-ish, might be a good place to start picking up some equity long term. Remember the weekly and monthly charts I showed you? Look at these trends on these big tech. My internet is messing up. Awesome. So yeah, if you bought this one back in October, same kind of pattern. Overall, if you DCA into these solid companies, you'll probably make money over the long term. Tesla just struggling with that 1,000 level. All day was just trying to hold it. We closed below. Very ugly chart, very head and shoulder-ish. Tesla under, actually it did close under. So I was going to say Tesla under this low. Tesla under 980, we can go test 900 easily. So if Tesla breaks 980 to the downside, 900 probably trades on this one. SE, nothing here as well. Another growth stock. It was strong at the beginning of the day because the dollar was very weak, but at the end of the day, it came back to where it belonged. I mean, it's the same thing, guys. These stocks are in downtrends. Every time they bounce, they just touch the 8-day and go lower. That's what it's been doing this whole way down. Why would it be any different? But if you can catch that little bounce to the 8-day with calls, you can get a good solid 50, 100% on these plays. And again, it'll be on your screen. So when it does hit the 8-day, you can flip back short. Until this downtrend changes, until they change the trend and put in higher highs and higher lows, this trend's going to stay in. You can fundamentally value as much as you want. It's not going to matter in this kind of market. They're selling everything. There's no buyers. So you guys have to play both ways in the market. You have to be a trader. You can't have too much bias. And I hope you guys are doing well like myself.